Hello, Brian.
Hi James, how you going?
I'm great. I'm great. You're one of the few editors that call me James, but that's all good.
Oh yeah, I should call you Woody
No,
actually.
no, no, no. It's fine. My mum calls me James, and you call me James. Everyone else calls me Woody, but that's all good. I actually like it's a novelty, so that's great. I wanted to get you on camera, and because I think, well, I mean, you took the reins of our key gold recommendation services, Rockstock Insider, and the more speculative hard money trader services. How long ago was it now? Little over a month ago. It feels like it's just been a few weeks. Time is flying.
Yep, it's actually just over 4 weeks, I would say,
Right.
and
So
it has been quite a whirlwind, I'll tell you that.
yeah, yeah. Well, in a good way, I think. But we've been really pleased that you came to work with us. You've got plenty of experience in the gold markets and the resources sector too, in more of a broad sense. But I wanted to get you on camera to basically really introduce you to our readership via the Insider. As you know, the Insider is a free e-letter that we send to all of our paying subscribers, and so it's really just so that they get to know you a bit more. So,
Excellent.
Brian, how? Why don't we start with your backstory? Like, so what got you into the gold market? What? I know you were born and brought up in Hong Kong. How about we start there?
Yep. So I was born in Hong Kong and I came to Australia in 1989. So I pretty much grew up with Western values. Our family left Hong Kong because of the concerns about what's going on in China. And we chose Australia because I think my father liked it here more than they would like Canada, even though most of our family friends and some relatives went over there. In terms of growing up here, so I did my high school in James Roos and then went to Macquarie University to study actuarial studies and applied finance. I did have a brief stint in Hong Kong in an investment bank, but I left very quickly because I didn't like the 100 hours a week lifestyle. Um, so I then went off to teach in university, and that was a 20-year or so career,
Yeah.
teaching in actuarial studies, finance, investments, risk management, statistics, pretty much everything in the commerce area except for marketing. And currently, I still take one or two classes for students in introductory finance and financial modeling. So it kind of bonds quite well with what I do because it helps me explain what I actually do for a living and try to unpack the ideas from complex ideas into something simpler, which is something which I hope I can do with my subscribers and also with the newsletters that I write.
So where did your interest in the world of money and investing begin?
It really began in around 2013. You could say I was living a quiet existence. That's why I was in academia for a long time. I didn't want to be involved in the fast-paced business world. But in 2013, my own personal investments took a big dive as a result of the gold price falling 100, $150 in a couple of days in April. And that weekend, luckily, a friend of mine sat me down and we had a chat about the gold stock prices coming down. And he explained to me in, in very serious terms that something was going on with the financial system. The first I heard of it about fiat currency, and that we were basically living in you could call it a fake money society. Everyone thinks that what you have in your wallet is something of worth and you work hard for it, but it turns out they create it out of nowhere and then they charge interest on it. And the reason why people ignored gold and silver for a long time until 2007 when it went up to 1,000 US dollars was they managed to keep the gold price down quite successfully. And when push came to shove and it didn't work out, the gold price just suddenly jumped out of the gates and headed to 1900. I caught on to that, but held on it for too long and not realizing that this was actually, you could say, a trap to get people into gold and then bang it down to 1100 and everyone will go, all right, forget about gold. We'll just stick with fiat currency because, hey, the Federal Reserve managed to control control the curve again with what QE3 and what else are they going to do? So that sparked my interest, and I ran into a website called Bull Market Thinking that Takoa De Silva had, and I was just basically digesting a huge amount of stuff in there. One thing led to another. I heard about Rick Rule, Peter Schiff, Eric Sprott, and not plugging anything here, but Daily Reckoning came into mind when I watched Mike Maloney's Hidden Secrets of Money video. And I realized, hey, this could indeed, as Mike Maloney said, the opportunity for like to actually change one's life, because we're seeing the change in the financial system that will probably not happen in our lifetime again. And I subscribed into Daily Reckoning newsletters and hopped on to Strategic Intelligence and learned a lot from Jim Ricketts, who I look forward to meeting in a short while, I believe.
Yeah, and so obviously, so you view the markets with a particular viewpoint on the gold markets, right? So where did your interest in the gold markets stem from? Because you were very heavily invested in gold, and partly what Greg and I we were so pleased that you came on board is that you've lived through a brutal gold bull market and you've come out of it and you've done very, very well. I mean, we can talk about your gold fund a bit later. That came a bit later. But what got you interested in gold specifically?
So I was a thematic investor from about 2009 or so, when I looked at infrastructure stocks because of the massive government fiscal spending. That worked out okay. I was getting it right and getting it wrong here and there. So I was looking for thematic investments where something was happening, and I was hoping to pick up like pennies for the dollar on stocks that may have been beaten up. And that's when the gold price came down and the gold mining stocks were all beaten into a pulp. That was a great time for me to go, okay, this is probably you could say, this is the theme that I'm gonna die on, right? And I went through it. I saw 70% of a 70% decline on my portfolio to late 2014. I could have given up. Many people would have said by about 30% down, you should give up, right? Because you're not doing it right. But my stubbornness paid off, and also because I was doing research in university, and one thing you learn about research is you don't give up because something didn't work. Sometimes when something doesn't work, it's because you thought of it from the wrong angle. When you change the angle a little bit, that's where it becomes correct. And one thing I will actually have to thank Rick Rule when I get to talk to him in the future is listening to him helped. He was actually reminding people sometimes your 10 baggers have to come out or like come through after being down 50 to 70%. Now, you could say that's almost a religious type of thinking, but when you do your research and you follow the trends of the market, you realize it's not. What really changed was when the oil price fell 50% in the second half of 2014. And I always believe you don't look at companies simply from a bottom-up basis. You got to look at the top-down partly in terms of what is driving the trend besides just a bunch of people throwing cash into a sector and floating it. And there was a macroeconomic theme to it. Lower oil prices lead to mining companies being more profitable. And that actually pulled me through. And when the oil price stayed down over 2015, we saw some of the big producers start rising. And that was what made me realize, okay, I'm calling it right. Now it's time to really dig in and understand about this whole industry, the ins and outs of it. You could say I did well in 2016. I was up about 120% for that year. 2017, that was the year when I was getting married and I needed cash, and it was stagnating. That was one frustrating time as well. fortunately, I had a victory under my belt, and that pulled me through. So I learned further that cycles go up and down, and they may actually take a while. And I do fully empathize with people who stuck through from 1998 to 2002, 2003, when the gold price actually just stayed low, and it took a while. And I've lived through it. I learned a lot from it, and I'm sure that there will be more ups and downs in the gold cycle, wherein I will actually also look at what other metals out there is catching the bid, just like what we're seeing with, and also I think some other base metals. Nickel is catching a bid. So
Yeah.
I will have to learn a bit about what's going on there. But right now, gold and silver.
Yeah, right. So I remember you said when you came on, it was almost like you were born to be the editor of Rockstock Insider and Hard Money Trader. You said it felt like your career to date was accumulating, and this was the natural step. But before you came to us, I think you got a publicly available website called Gold Fund, I believe.
That's right.
That's basically where you chronologize your family's wealth, and that's where you invest your own capital. And you been publishing up to this point quarterly reports, which is plain for everyone to see, warts and all. And you've been doing that for a good number of years prior to coming with us, haven't you?
Yes. So I did some private research since 2016 because I was going, if I'm going to capture the right companies, I need to have a systematic way of recording data. That's one of those things I learned when I was doing my research degrees in university and teaching. And as I built that up, I started writing reports because I wanted to actually document and see how I develop my knowledge, and then put it to the test. So I put some posts on Hot Copper, and after a while, I was going, maybe I'm going to email people that I have followed and listened to and see whether they're going to respond on my research. If it's good enough, it's going to get their attention. And it actually did capture the attention of Jordan Alazier, who was at ABC Bullion at that time, but now is at Perth Mint. We're good friends. We live one suburb away from each other. And he actually invited me for coffee, and we had a chat, and he gave me the idea of, you should actually put this up on a website and also set up a separate portfolio and have it be able to have it audited in the future. So then if you're going to develop something out of it, people know you, people have seen you around, and there is a place to document and keep records of where you are. So I actually did that, and that has actually helped a lot because it got a lot of people commenting on my work, good and bad. And I'm also able to understand when people don't like my research, is it because they don't like the fact that I talk the good and the bad, or is it because I'm actually doing bad research? And 95% of the time, when people don't like my work, it's because I'm not talking. They're not hearing their opinions out of me. They want to hear the shilling of a stock, and I'm actually saying, no, I think this stock is a little overvalued. And little bit of tooting my own horn. I have if you go and take my records and look at my valuation, compare it against companies like JP Morgan, Morgans, and Canaccord Genuity, etc. See who's done a better job in calling it right in the next 12 to 18 months.
One of the things that was also good about doing that is, and we spoke about this before I hit record on this conversation. You said what coming on as the editor of the two services means that you're capturing the entire life cycle of a company. And I guess that's born from experience out of the research you've been doing with the Gold Fund these past years. Can you just talk through what you mean by the life cycle of a gold company?
Yep. So there is a mining life cycle in that people with there's a place in the ground where there's people know that there could be minerals, and they're going to go through the conception phase where this is an idea. We're going to put a few $1 million and try out whether this place has minerals under the ground. Then you have the exploration phase where they are actually doing the drilling. They're getting the drill. They're getting the drill results and working out whether there is an economic deposit underneath the ground. Now, once that is done, you enter the discovery stage whereby there is confirmed deposits under the ground. You have the geologists who come in, they run the models, they've signed their name next to the report, and you now recognize it in the financial accounts as an economic deposit. Now comes the phase which becomes a bit more difficult. Is after people usually get excited in the conception to the discovery phase, because that's when you're starting to dream about how this is your next Kirkland Lake, your next Gold Corp, your next multi-billion-dollar company from like maybe a couple of $1 million initial investment. But once you get to the discovery stage, there's deposit underneath the ground, you hit the reality of how we're going to dig this out, right? And that takes millions of dollars, when we're talking about millions. And at this stage, the CEO will have to hire a PR firm and go out and pitch to the institutions who may lend to them, or maybe or venture capitalists, or small investors that like our subscribers, to throw in a few $1,000, tens of thousands of dollars, in order to get this happening. This is the feasibility stage. And the feasibility stage is where a lot of investors who overstay their welcome in the exploration and discovery stage. That's where it gets frustrating for them, because the price can come down. Once you get the funding, that is when you come up with the mine plan and you've got the banks lined up. That is the next stage where speculators will want to come in, because as you build the mine, that dream now becomes reality. And furthermore, someone's willing to pay for that dream. So in the development stage, you're spending maybe $50, $100, $200 million to put up the processing plant, to put up the gold room. And once production begins, then it's the next day. You could say that's where the rubber hits the road and you're really starting to see the revenues come in. So across this entire mining life cycle, it's actually about 20 years. Now the concept to the exploration stage, some companies may take 5 to 15 years, depending on how big the deposit is and how lucky the company is in being able to get the financing to keep drilling. Now, between the discovery stage to the feasibility stage, where you're actually booking the resource, you have the mine plan, that will probably be about 2 years or so. From the feasibility stage to the development stage and the mine building, that could be about 12 to 18 months. And then production, depending on how big the deposit is, anything between 3 to maybe 40 years, depending on how big the deposit is. So the Rockstock Insider hopes to capture the later stage of the mining cycle, where there's more certainty.
I guess is the less speculative.
Yes, less speculative. A bit. There's more certainty. There's something that you can poke a stick at, you could say. We got to be careful in saying that there is certainty and that there is no risk, because mining stocks follow commodity cycles, and those cycles can last for a year. It could last for 4 or 5 years, and prices can go up and down. So there's significant risk. But we got more we're more comfortable with the numbers. There is something that we're actually able to pin our hopes on. So Rock Stock Insider captures more the developers and the producers, but occasionally we might find one or two really good explorers that we may throw into the deal because it's something big. It's a Red Lake complex. It's a Fosterville, and Shay actually has one of the three of these in Rock Stock Insider, Julima deposit, which Chalice Mining has, and that's done tremendously well. So occasionally that might come into Rock Stock Insider. But if you want to really make a life-changing return on a speculative stock, you have to go to the hard money trader, where we're going back into the early stage of the mining life cycle. In the early stages, it's as much of a coin toss, really, because they know as well as we do what's underneath the ground. They've got to drill it. There's not much to pin on. And as they start getting the deposits and in the feasibility stage where the price comes down, hopefully I'll be able to come in and bring value and identify which of these stocks are actually near the end of falling down in the value and going to start heading up. We're going to find the cheap ones among the stash in the feasibility stage and the pre-development stage. So that's where hopefully the value comes in. That's where you've got to pay the money in order to get the big returns.
Yeah, I reckon also a lot to do in the hard money, on the more speculative end of the gold. When the gold price really gets into a bull market, it doesn't really matter if these explorers have a resource or not. They get taken up. Do you remember the Poseidon bubble?
I've heard about that, and that is actually one of those things I am acutely aware. So I will actually disclaimer myself to say, sometimes in hard money trader, you may wonder why I recommend that we sell out while the party is still going. The reason is because of things like Poseidon. I don't want to actually overstay our welcome and end up our subscribers have a story, but not the cash to actually have in their wallet.
Yeah. Well, your knowledge of the mining life cycle and your unique experience in actually risking your own money and your own family's money was part of the reason why we wanted to get you in, and we were so glad that you came on board. You bring that real depth of knowledge and research to this market for our readers. So it's, I just want to say from the publisher to you, formal welcome. It's really good to have you on board, Brian. I've got one more question. I think we've had a lovely discussion. So that's getting into the weeds of the gold market and analysing gold stocks from an operational point of view. How much of the bigger picture do you take into account?
So in terms of looking at which companies to choose, I also take into macroeconomic and also geopolitical aspects, because mining is inherently driven by the law of the land, and the law of the land is decided by politics. So I had actually invested in companies myself in jurisdictions where the government is less stable, and also they changed the mining laws so that certain mines would end up being suspended. So these types of things I do keep a very close eye on, because sometimes it comes without warning. And I also keep track of other commodities just to see where everything is, partly for the sake of capturing the next leg up on something, because gold and silver and precious metals sometimes take a rest. And we've seen that recently between 2017 to early 2019, when most people moved off on iron ore instead, and that's when it would be better off actually going on to a different commodity altogether. So I like to actually ensure that I'm not just stuck with one place. I don't want to be the clock that gets it right twice a day.
Yeah, yeah, yeah. And so, just as a little takeaway for readers listening to this, where would you, where are you? I mean, of course, you know the gold and silver markets, and you're watching those very closely. What other resource industries are you kind of excited about for the next year or two?
Well, at the moment, I think uranium is catching a significant bid. They've had the longest bear market. I think it's even the longest bear market on record for a single commodity, something like 8 or 9 years, even 10. And I mean, on one hand, I can see that electric vehicle boom is bringing up nickel, copper, and lithium. I am a little bit careful and cautious about lithium at the moment. So you can see, I sometimes don't follow the crowd. I could get that right or I could get that wrong. I like copper and nickel a little more than lithium because I think it has actually gone a bit red hot. I also believe that while the green energy agenda is being pushed through, I hold the contrarian view that it's not going to be what it's made out to be right now about solar and wind. I think there will be some significant changes as a result of what you could say is a geopolitical upheaval that is definitely coming in the next couple of months. I won't say exactly what it is now. I want people to keep watch on this, and should it happen, I'll talk a bit more about it afterwards.
Well, maybe you can update your readers, and maybe we can pick up this conversation maybe next week or something, and move the conversation forward.
Yeah, that sounds great. Let's do that.
Cool. All right, Brian. Thanks a lot for your time. I've got some other questions, but I think that can be for another conversation about to get your thoughts on the China angle of the story. But perhaps we can have a more of a chat on that next week.
That sounds great. Thanks, Woody. And I look forward to hearing more from the subscribers as well. Drop me a note anytime.
There you go. Cheers, Brian. And thank you all for listening.